All right, welcome back, traders. John Caruso here, May 12th, little midday update for you here. We got a bounce going right now in the equity markets. When I came down this morning, flipped on the screens, all of the broader stock indexes were officially signaling immediate term oversold in our proprietary technical indicators. And we've got a heck of a bounce going right now. The number we were keying off in the S&P 500 is that 20% correction line, which was down at 38.46. I think we got pretty close. We got to about 38.70, and now we're bouncing. We're back at 39.40 in the S&P 500. We're about to press 12,100 in the NASDAQ. That is also well off the lows from this morning. I believe we breached the 11,700 mark on the downside. We did have PPI this morning. PPI came in. We did see a year-over-year deceleration. Prior reading was 11.5. We got 11%. I didn't have a chance to kind of look inside of that number and see what the individual components were doing. But on the surface, we did see a deceleration in producer price indexes, which is a leading indicator for consumer price indexes. Consumer price index yesterday, we did see a deceleration in the headline number here, but very interesting when you looked inside. If you go to the Bureau of Labor Statistics website, you look inside the number, you saw some interesting things. You saw the energy component was actually led down by a 6.1% decline in gasoline prices inside the index, but then we saw the natural gas component ramp up 2.1%. We did see used car prices actually decelerate at its fastest pace in a 3-month window in the history of the Manheim Index that reports on vehicle pricing. But then we saw new vehicles actually accelerate, I believe, over 2%. So it's like inflation whack-a-mole inside the CPI number. One thing goes up, one thing goes down, and then it's like that, and it's probably going to be like that for the next several readings. So. But we could be on the precipice of seeing inflation begin to decelerate from here. We know the Fed is doing everything that they can to try to slow the economy down. I think at some point here in the next couple of months, the attention is going to move away from inflation, and it's going to be refocused on the pace of growth and how fast growth is actually slowing. That hasn't shown up in the data yet, but it is happening under the surface. And as we start to move into June, July, and August, you're going to see some pretty stark decelerations, we think, in key growth components in the economy. So keep that in mind. Gold prices came in a little bit here. We're in the accumulation phase in gold. We still recognize that gold could slip a little bit lower over the near term, but we do think eventually the Fed pauses on its interest rate hike cycle, kind of takes a look around maybe towards the end of the summer. That's going to be a very bullish scenario, we think, for gold. Oil prices are back above 106 here this morning. We're kind of watching that 105 line, sustained price action below 105. We think we can carry back down to as low as 95 to maybe 90. About sustained action above 105, we think 111 to 115 is possible. But just a very wide trading range in the crude market at the moment. So that's all I have for you here today. Best of luck to you out there. We'll catch you back here next time.